Hello there. Well, what a week it's been. The European Central Bank delivered a bazooka monetary package, cutting its main interest rate and its bank deposit rate as well as a plan to expand quantitative easing from 60 billion euros a month to 80 billion a month. And corporate bonds are on the menu for the first time. But next week, the main news events, well, they'll circle around the UK and the US. We've got the UK budget and we've got the Federal Reserve interest rate decision. Let's see what else is on the agenda then in terms of eco news then. Okay, we've got China. We've got the CB leading economic index there, Eurozone industrial production, UK CB as well, the leading economic index for the UK and China, and US NAHB housing market index for Tuesday. It's quite a busy eco week. We've got the RBA monetary policy meeting minutes, Bank of Japan gets involved, France and Italy inflation, Eurozone unemployment change, and US retail sales. In the middle of the week, we are focusing on the Federal Reserve interest rate decision that I just mentioned. We're going to digest that and analyse that just in a second. The UK's budget statement, another big part of the week. Japan too, industrial production, UK unemployment rate, US CPI and the EIA oil inventories. The oil glut continues to play on investors' minds as we On Thursday then we've got the Bank of England. It's the interest rate decision to look forward to. Japan's trade balance, Australia unemployment data, Eurozone inflation trade balance and the US jobs opening. The Friday then, to finish off the week, it is again the Bank of Japan monetary policy meeting minutes and the US Philadelphia Fed manufacturing survey, Canada inflation and US Reuters consumer sentiment. So eco, lots to look forward to, but it's all about Wednesday. We've got Chris Beauchamp right here. We're going to talk about this because Wednesday is a really big day on both sides of the Atlantic because we've got the UK budget, which is really going to be, well, Brexit's going to play into this, presumably, and also a lot of bad data that we've had coming out of the UK in terms of manufacturing data too. So plenty to think about for the Chancellor, George Osborne, right?
Yeah, I think it's going to be an interesting one. So the budget is always a difficult one to call from markets because unless he really significantly upgrades or downgrades growth forecasts, you don't tend to see that much reaction in the broader market. This isn't one of those crisis budgets, if you like. It's more of a, this is the first proper budget they've had since the election, continues to set out where we see the UK economy going. So unless he sort of tinkers with specific sectors, it's hard to suggest what will happen in terms of the market reaction. Although if you look at, I suppose, the pound against the US dollar, we've had a steady appreciation now since those lows of late February. As the Brexit debate, it's going on, but it's died away in intensity and it's just sort of settled into this low-level discussion. So we are continuing to look at appreciation of the pound against the US dollar, again, at least over the last sort of 2 weeks or so. So that is important. Perhaps more important is the UK data we get in that morning as well. We get unemployment figures as well, plus the wage data. So unemployment expected to tick down to 4.9%, so mirroring the fall in unemployment we've had in the US. So both economies in a very similar position, i.e. pushing towards full employment. But the key thing now is that translating, that tighter labour market, is that translating into higher wages? And those are expected to rise, but not by as much as last month. So if you get a number that beats expectations, you could actually see a bigger rise in the pound against the US dollar. We'll see where we are when those numbers come out.
Mm-hmm. And wages are also a big theme over in the States as well, in terms of the Federal Reserve's rate decision. That's coming up on Wednesday. The markets are really going to be focused on that. What do you think is going to happen? Are we going to have a rate cut or not?
We're certainly not going to have a rate cut. We might get a rate increase, but it seems very unlikely at this point. I think market pricing suggests maybe a 10% chance of a move this month. Some analysts, such as the Bank of Canada, suggesting yes, they should move this month, but it seems unlikely. Instead, the Fed is probably going to continue to outline what it means by its gradual path of rate hikes. We've seen a bit of uncertainty in financial markets, volatility. US data in the first 2 months has been decidedly mixed, although the last non-farm payrolls reading was fairly strong. So I think you won't see any move in terms of interest rates, but further commentary that suggests we're continuing to view the employment situation, the economic situation, the overall outlook for the US as fairly positive. Mm-hmm. And that would mean they would expect to hike probably a couple of more times this year, perhaps once in June,
but
and then
four.
Maybe toward, I think not 4 really. We'll certainly have to cram those in now, with March looking extremely unlikely. So in terms of the market reaction, you've had a big move down in the US dollar. This is the dollar basket, so against a number of currencies. But we are seeing a bit of a bounce today. So If we do get further rallies in the US dollar, that will be quite interesting to watch. So there's one coming back down to those levels we were in mid-February or early February, down towards that 96 level. And then if we switch over maybe to look at where the euro is, of course, in the light of Mario Draghi yesterday, we've had a lot of euro strength yesterday because of his comment that they wouldn't cut rates again in the Eurozone, although that might change. So today we've had some unwinding of that move, but overall it looks as if we could see the euro continuing to push higher for the time being.
And just want to say, earlier on in the week, we had the federal vice chairman saying that he simply does not know what's going to happen, so it's anyone's guess. Let's talk about company data then. Monday is not that exciting. Well, no, actually it is, because if you like gin and tonic, then it's likely your tonic comes from this company just here. It's a Fever Tree drink, so it does all sort of mixer drinks, including gingers, tonic waters, as I say. And that's coming up, so that's going to be really in the spotlight there. It also does nice lemonades. Tuesday, we've got Khan Energy just here. Actually, shares rose 7% this week after an upbeat operational update. We've got online supermarket Ocado there, copper mining company, to French Connection, the fashion retailer, Sainsbury's. We're going to digest that company just now, third biggest supermarket chain in the UK. Lots to come on Wednesday as well. We've got technology companies, Smiths Group in there. We've got pharmaceuticals too. We've got FedEx as well, the parcel company. Insurance groups, car manufacturers there with BMW as well. Thursday, more from the fashion industry with Ted Baker, Premier Fernal as well, the electronics products company. Oil and gas as well, Inquest on the go, Kia, construction company, building materials industries as well, and Italian energy giant Eni on Friday to finish off the week. Berkeley Group. We've got insurance, a house builder just there, financial firm, Investec. Oh, my favourite, Tiffany & Co, the jeweller and energy's largest insurer, as I say. Okay. All right, we've gone to talk about Sainsbury's, because Sainsbury's is in a difficult predicament at the moment, because they're dealing with all these Asda's, Tesco, Aldi's on the scene who are really slashing their prices, and Sainsbury's has got to compete with them.
Yeah, I think Sainsbury's, the key issue at the moment for them is how they see growth in the supermarket sector over the last few years and also into the future. Now, we're expecting a slightly better performance in terms of sales growth for the quarter. This is a trading statement, a fourth quarter trading statement, so we'll see whether that shows any improvement. Also, of course, you've got this battle over Argos and Home Retail Group as it is. Will it come out as a victor? Will it need to increase its bid? And of course, Sainsbury's has been very keen not to push the price too high because it would ruin its financial discipline, but it may need to sort of up the ante a bit. So we are approaching a crunch point there. Will Sainsbury's succeed in this bid? Because it is quite an ambitious move to get Argos within Sainsbury's, and it represents the first sort of big thinking in the supermarket sector we've had for a while. So we can expect maybe a bit more commentary on that and how they see the bid developing over the next few months. But if you look at the chart, we're approaching a very, very big level, because this £2.80 a share, 280, this top blue line here, has been resistance all the way through 2016 thus far, and crucially all the way back into most of 2015 as well. Every time we get up to this 280 mark, the share price fails to sustain momentum. And so if you're looking at this as sort of a range-bound trade, you could argue that actually it might start to turn lower. A lot of the good news has been in the price. The share price has come up significantly from those lows of late January, and maybe now it's run out of momentum. Conversely, if you are of the optimistic bent and think that actually there are better times ahead for Sainsbury's, what you want to see is a big close above this 280 level, pushing us on back into a sustained uptrend. So that's definitely the one to watch out for, not just this week, but over the next couple of weeks for Sainsbury's.
Okay. Moving on, Legal and General then, something entirely different. It manages almost £720 billion on its books, that's of assets, has around 10 million savers and investors, so it's a huge, huge company. Actually recently spoke about Brexit, saying that it is cushioned against that because it's based in the UK. It's got Asia and US on its books, so it's actually not that exposed to Europe, which is interesting. What are you expecting from this company?
We'd like to see continued improvement in the insurance sales in both here and in Eastern Europe as well, which is another key area for Legal & General. It has been a fairly decent performance over the last couple of quarters, and also they'd like to see further inflows into their asset management divisions, because that's also another key arm for these insurers, is the money they have under management and how they're deploying that. So if they continue to have attraction to that, that will boost the business as well. Legal & General share price has done very well in February. We were at around £2 a share at the beginning of the month, or rather the sort of second week or so of the month actually, and now we're at £2.40. So about a 20% rise in the share price. So very, very good performance. You could probably call it quits for the year if you bought Legal & General in February. Does the rally have more legs to it? Well, it's difficult to say, but this full year update will certainly set the tone for any further gains. And if it does push on, you can see those highs from late 2015, about £2.70 a share, certainly the area to watch out for. If we do get any sort of negative price action down below £2.30, certainly would suggest that that bounce in the share price has run its course.
Mm-hmm. Okay, Chris, so in terms of next week, we're middle of March now, we're well into 2016. How do you think the week's going to play out? What's going to be the theme?
Well, I think we have seen strength in equity markets, obviously, over the last 2-3 weeks, and that's come back into play today in the wake of the ECB. Now, it's looking a bit weak, I think, really. We've had a strong bounce, and investors are wondering, well, is this the beginning of a new uptrend, or is it just one of those bear market rallies that then begins to sell off? And I think maybe we have the answer now. So, and if you look at the S&P 500, we've stabilised after about a week or so of this chop around the 1980-2000 level, and we're pushing on beyond that now. That red line there's a 200-day moving average. So for technical fans, that is the key one to watch out for. If we do close above there, that signals that more upside is on its way. But if you look at historically, the March to May period for equity markets, especially the S&P 500, is very, very strong. You tend to get, historically, good periods of performance for equities in this sort of 2-month slot. So historically, it looks as if we could see a continuation of these gains. Over in Europe, the ECB seems to have done enough. Despite the scepticism yesterday, we've had Eurozone indices strongly higher today, and it looks as if for the DAX that we could be heading back towards 10,000. If we get a break above there, it looks like more gains are on the way.
Ooh, well, that sounds exciting. Gains, we like that, don't we? Okay, thank you very much indeed. That is how the week is going to play out. We've got gains to look forward to from March to May, it sounds. Thank you very much indeed for watching. We appreciate that. And do not forget to put those stops on. See you next week.